Good morning, ladies and gentlemen. Welcome back to the morning show of yours truly, Dex the Algo Capitalist. You're tuned into the morning show, and I'm hoping that you're having a great day. So, we had a little bit of government news reports that came out this morning, and for the most part, the markets are mixed. And what you're seeing basically across the board is markets moving into consolidation, and some are actually have entered into actual correction mode. So that's what we're going to be talking about today. The US dollar index is up 3 pips right now at 106.24. So still holding that 106 handle. Just 2 points shy away from 108. The euro is up 9 points this morning. I'm sorry, that's at points, 9 pips at 106.62. Pound sterling up 1 pip at 124.48. And the Aussie is down 38 at 64.15. We have the Bitcoin futures right now down 925 points at 62,635. It did dip to 61,860 in the overnight market. Ethereum futures down 42 at 3,067 even. It did dip to $2,977.50 in the overnight market. Crude oil down a nickel at $85.38 per barrel. We have nat gas down a penny at 167, and gold futures up $7.90 an ounce, trading at $2,390.70 an ounce. It did get over $2,408.60 this morning, and the overnight low was $2,379.20. So we're well off those lows. Silver down 48 cents this morning at $28.22 per ounce. It did dip to $28.03 and went as high as $29.10 an ounce. Copper is down 8 cents at $4.29 this morning. Dow futures up 69 at 38,058. E-mini S&P 500 is down 14 and 3/4 points at 50.89 and 3/4. E-mini NASDAQ 100 down 10 and 1/4 points this morning at 17,863 half. And the Russell down 17.4 points at 1973.60. So that's a look at our overnight snapshot. As far as news this morning, Goldman Sachs quiets the haters with a monster earnings report. Leaked docs show one of Prime Video's biggest issues, forcing customers to abandon shows. And the best bet in business these days, targeting young men who like to gamble. Yeah, that is definitely an issue. Up for review, the worst product I've ever reviewed for now. Marquise Brownlee, the YouTuber better known as MKBHD, didn't mince words with the title of his review of Humans AI Pen. Never heard of it myself. In a 25-minute video, Brownlee details all the issues he encountered using the AI device. There were a lot. Brownlee's review aligns with other criticisms of the device, but not all of those came from someone with as much sway. His YouTube channel has more than 18 million subscribers. One user on X pointed out that calling the review almost unethical for potentially killing someone else's nascent project in a post reposted over 2,000 times. Most of the internet disagreed, and a human executive even thanked Brownlee on X for the fair and valid critiques. But in highlights, the power of Brownlee's reviews. Earlier this year, a negative video of Fisker's Ocean SUV by Brownlee also made waves on social media. Critical reviews in an age of innovation raise some interesting questions, however. To be clear, there was nothing wrong with Brownlee's review. Humane's AI pen cost $700. Watering down his review to ease the blow would be a disservice to the millions of fans relying on his perspective before making such a significant purchase. Too often, companies view potential customers as an extension of their research and development. They're happy to sell a product that is still a work in progress on the promise they'll fix it on the fly. But In a world of instant gratification, it can be hard to appreciate that innovation takes time. Even Apple can run into this conundrum. Take the Apple Vision Pro. Reviewers are impressed with the technology behind the much anticipated gadget, but are still struggling to figure out what they can do with it. Maybe over time that will get sorted out. It's also worth remembering how cool tech can be. And if you think about it, software powered taxis in San Francisco is a thing. Sure, robo taxis have their issues, but they also elicit that, you know, this is wonderful. This is so innovative. This is so new and fresh. As for Humane, America loves a comeback story. Just look at Cyberpunk 2077. The highly anticipated video game had a disastrous launch in 2020, but redeemed itself 3 years later, ultimately winning a major award. Still, Humane shouldn't get a pass for releasing a product that didn't seem ready for prime time, according to the reviews. And its issue could be bigger than glitchy tech. Humane's broader thesis about reducing screen time might not be as applicable. Very interesting. Goldman finally strikes gold. After a rough stretch, the vaunted investment bank crushed earnings expectations, sending its stock soaring. A big tailwind, according to CEO David Solomon, is AI spawning enormous opportunities for the bank. Buy the dip, Webbush says. Last week's drop among tech stocks shouldn't scare away investors, according to Webbush. A strong earnings report buoyed the ongoing AI craze, should keep them soaring, strategists said. But JP Morgan doesn't see it that way, saying prices are already stretched. I happen to agree with JP Morgan, as the US stock index futures are slowly creeping into correction mode. And if you don't know what I'm talking about, then you're going to want to take a look at last night's video I did. And that was the evening watch list report. China's economy beat analysts' expectations. As you all know, US commentators have been very negative on China's economy. They've been saying all types of negative things about it. There have been a plethora of videos on social media calling for the demise of the Chinese economy. But the country's GDP grew 5.3% in the first quarter of 2024. That blows out any of the US's GDP numbers over the past 3 to 4 years. According to data published by the National Bureau of Statistics on Tuesday, it's a welcome return to form for the world's second largest economy, although below par. New home and retail sales remain a cause for concern. But those are the same things that remain a cause for concern in the US. But once again, China destroyed the US in the GDP growth segment, 5.3%. That's incredible. Amazon Prime Video viewers are giving up on its shows. Leaked documents show viewers are fed up with the streamer's error-ridden catalog system, which often has incomplete titles and missing episodes. In 2021, 60% of all content-related complaints were about Prime Video's catalog. Well, there's one thing that they did not mention. They failed to mention this part, and that is how, let's say, show Acme Inc. is, let's say it has 20 seasons, and they'll say now available on Prime, right? You say, I've been wanting to see that show. Let me binge watch this show. You go and you'll click on it, only to find out that seasons 1 through 6 are available and included with Prime. That is the dumbest thing I've ever seen. Why would you only give out a few seasons, I should say, and when the thing has 20 seasons, you give us 6? How ridiculous. But they've been doing that a lot. And I know what the game, I peeped the game, all right? I know you do too, right? They're taking the position of the street corner drug dealer, right? So they give you a little taste for free. because they know once they do that, you're going to be hooked for life. And that's what they're hoping with a lot of these shows. So they'll give you a couple of seasons for free, included with Prime, knowing that you're going to be hooked and you're going to be dying to see how everything ends. So then you'll be like, okay, I'm willing to pay now. What app did you put it on? Oh, we put it on the 123 app. So now you got to pay anywhere from a couple of dollars to up to even $5 or $10 or $15 or more for this app. It's really like a bait and switch, you know what I mean? And they're trying to get you hooked. So they'll put the most slamming shows and give you a couple of episodes or a season or two, and that's it. If you want to see the rest of it, you got to buy a separate app. You're already paying $100 a year for the Prime. Now they want you to pay even more for these seasons, these shows, and that's messed up. It's like each app has become a cable company in and of itself. You can rent things, you can buy things, and of course you have the free viewing that comes with a subscription. But they're making that subscription service more base model as time goes on. You're getting less and less for your money. It's sort of like, what's the word I'm looking for? What's the term I'm looking for here? Shrinkflation in the streaming services. So yes, we're seeing shrinkflation across the board in consumer services. It's consumer goods and services, shrinkflation everywhere. So now they're shrinking their number of free shows that you get to watch in their entirety with your subscriptions, because they want to move you over to a more expensive app and a more expensive service. So that's what they're doing. It's a psychological game, and people are voting with their feet and saying, screw you, I cancel my subscription. But see, Amazon is a little bit unique because unlike MGM's app or BET Plus or HBO, Cinemax, Showtime, there's a zillion apps out there, right? But Amazon, they got you. Mario got your wallet. Yeah, Amazon got you. See, unlike with a Netflix or a Disney Plus, I can just cancel that and say, I'm no longer interested in your service. You don't have anything on there that I want to watch. So I'm out of here, right? Call me when you get some new stuff, then I'll come back, right? But with Amazon Prime, you don't have that luxury because Amazon Prime is tied to all the Amazon services. And there is no way you can avoid Amazon Prime. If you buy or sell anything on Amazon, you're going to have an Amazon Prime account. It's just that simple. All right. The world of Amazon opens up to you with an Amazon Prime subscription. It's not just about videos. And they know that. So they got you, just like the cable companies. Yeah, your local cable company, your ISP. They know that you're not going nowhere, because you can say, well, I'm going to cancel my cable TV subscription because you're too expensive. I'm just going to get these handful of apps and watch my favorite shows on these apps, costing me a fraction of what I was paying to cable. So if your cable bill was anywhere from $200 to $300 a month, by getting like 5 different apps, you can bring that down to $50 or less per month and still get all the shows you want to watch. And so cable companies know that. That's why, technically speaking, you didn't know this, but they were practically giving you the cable channels for free. The thing that you're paying for with your cable service provider is the internet. And they know you can't go anywhere. They still got you. You can cancel the TV services, but you're going to still have to stay with them for that internet. And they know that. And so does Amazon. Amazon knows this. You're not going anywhere because that Amazon Prime is saving you a lot of money and shipping and receiving. And if you shop at Whole Foods or any other place that Amazon owns, you get benefits. So you're not going to let those bennies walk away just for a TV show. And they know this. That's why Mario got your wallet. Okay? That's what it is. Eric Newcomer is bringing his Cerebral Valley AI Summit to New York. The conference, originally held in San Francisco, is famous for producing one of the largest generative AI acquisitions ever. Now it's coming to New York in June. OpenAI is plotting an expansion to New York City. Two people familiar with the plans have spoken out and saying the ChatGPT developer is looking to open a New York office next year. That would be the company's fifth office alongside its current headquarters in San Francisco, a just opened site in Tokyo, and spots in London and Dublin. Interesting. America's young men are spending their money like never before, from spots betting to meme coins. Young men are more willing than ever to blow money in the hopes of making a fortune. What is that saying? A fool and their money are soon parted. Investors are getting into women's sports. With women like Caitlin Clark dominating March Madness headlines, investors see a big opportunity and they're pouring money into the next big thing in sports. Yeah. Bad news for Live Nation. The Wall Street Journal reports that the Justice Department could hit the concert giant with an antitrust lawsuit as soon as next month. Live Nation, which owns Ticketmaster, has long faced criticism over its high fees. So, because a person's charging too much, they get to be brought up to the Justice Department? Can't you just go somewhere else and not use Ticketmaster? Correct me if I'm wrong. I don't know too much about this, but it just makes sense that if one company is price gouging, you just go to their competitor, right? Why does the Justice Department care about what people charge? Price gouging is limited in scope and has to do with issues of national security, like during Hurricane Katrina, you know, during those kind of things, major weather, events, catastrophes, things like that, where price gouging is illegal. But just because a company wants to charge something ridiculous doesn't mean that there's someone that's willing to buy it. I mean, if that were the case, then don't you have to bring the entire real estate market before the Justice Department? Because some of these houses that are being listed, they're asking ridiculous prices for them. So shouldn't they be brought up to the Justice Department? I mean, where does it end? Anyone who you feel charges too much for something gets to be brought up before the Justice Department. I mean, who gets to decide what too much is? See, that's why the government needs to leave the free markets alone and let them be free, because price discovery will dictate what the true price of something is. The cure for higher prices is higher prices. The cure for lower prices is lower prices. These are just financial and economic facts. In other news, Blackstone hires Walmart AI Wiz to supercharge its portfolio companies. Taylor Swift, Rihanna, Blackpink's Lisa, celebrities spotted at Coachella 2024. Who gives a darn? NYC's Rat Czar says stop feeding the pigeons if you want the vermin gone. Oh boy. A major Tesla executive left after 18 years at the company amid mass layoffs. Some Tesla factory workers realized they were laid off when security scanned their badges and sent them back on shuttles, sources say. Now, that's cold blooded. That is cold blooded. What's up, Elon? You didn't have the gonads to face the people and let them know that they were laid off. You didn't have the You could have sent them a sticky note, an email, a text. You could have done something. You could have communicated something. Just let people get up and go to work. They had to fight traffic to get there. Some of them, they had to go through all these changes just to get to work. They had to spend time and driving, spending gas money, riding trains and buses and taxis and Ubers and Lyfts, going through rain and snow and sleet and hail just to get to work, only to be told, "Oh, you didn't know? You're fired." That's cold blooded, Elon. Cold blooded. And you guys still see him as a saint? Really? Whatever. New York is in San Francisco is very much out for tech workers relocating. AI could split workers into two, the ones whose jobs get better and the ones who lose them completely. Again, they want you to believe that you're not going to lose your job to AI, yet you are losing your job to AI. Oh, look at that. Now, Google is using AI to answer search queries. They've been doing that. You're just now getting late to the party. A longtime banker gives a rare inside look at how he is thinking about his next career move from compensation to WFH. Clarence Thomas didn't show up for work today. Today's earnings is United Airlines, Bank of America, Morgan Stanley, and others, and it's free cone day at participating Ben and Jerry stores. Oh, free cone day, man! See, why did I have to be allergic to milk and ice cream, man? I would definitely take advantage of that. I remember some years ago, they were giving out free Slurpees at the 7-Eleven. And yeah, we took advantage of that. That was fun during the summer. That was many years ago. All right, folks. So that's it for now. Kind of quiet here. Mixed markets. Like I said, a lot of things are moving. You got volatility increasing because a lot of these securities are headed into corrective mode. Some of them are already in corrective mode, and you need to be aware of that. That's why we do, these reports, especially at night, to let you know what to expect over the coming trading sessions. All right, folks, if you liked this, go ahead and smash that like button. Subscribe if you haven't already done so, and share these with friends, family. You never know who it may help or encourage or enlighten or inform. And remember, system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I see you there, my man. You want to know, is Mara getting cheap? That's a good question. Let me see if I can find an answer for you. Let's see what we got here. I remember looking at that not long ago. Let's see what's going on. All right, so Marathon Digital Holdings on the NASDAQ. According to analysis, let me pull that up. I'm going to give you what thus saith the algo chart. All right, so yeah, it's getting extremely cheap. It's in a interesting spot right now. Okay, so let me share my screen with you, if I may, just so you can see this. All right, so it's in a bull market, but it's in a correction. It's in a bull market correction. All right, so as you can see here, you hit a top back here the week of February the 27th. That's when you hit your last 52-week high, and then from there you've been falling. So basically, you've already fallen like $20, because that high was at that 35 level, $35 level. Actually, it hit 34.09. So yeah, you're basically down $20. So yeah, um, this is one of those situations where you're below the Kumo cloud. You have a bearish trend momentum reading. You're in a full-blown corrective mode. You've taken out the prior key support level back here. So yeah, you're in a free fall status. The next downside target would be the old support back here from last year, December of last year, at $8.35. That's where this thing is headed. That's the next downside support. All right. You may have a pit stop. Let me see something here. Let me tell you. Let's see. Okay, so, okay, this here. Okay, you might find a short-term support on the way down there at $14.15. All right, this is an old support here. I think you've already taken out this one. Let's see. Let me see what you got here. Yeah, you got down to $15.11 in yesterday's trading, and that's below this support, and it's below this one here. So yeah, you are on your way to here. So $14 handle, you're on your way. You're definitely on your way. All right. So that's what I watch for. Um, you should not still be long the market unless you will long this market, prior to last year. If you've been long from like $5 or a couple of dollars and you've just been holding this has been like a long-term trade for you, then I get that. But if not, if you've been using it as a trading vehicle, you should be out of longs. Technically speaking, you should have been out of longs up here when you got the crash alert. And if you got in here and took advantage of the rally alerts, then you were told to take profit right here. Then you got long again right here. Then you were told to take profit again once you got up in here. So yeah, you should be flat or short this market right now. You should not still be long Mara under no circumstance, unless this is a long-term play and you're still green on the screen. All right. So that's my take on Mara. All right, folks, I'm out of here. So I will see you guys this evening for the evening watch list. Peace out.